Economists say inflationary pressures are coming from food and high fuel prices. In April, the price of a litre of petrol increased by between 28 and 36 cents, depending on the grade, while a litre of diesel inched up by between 152 and 168 cents, also depending on the grade. A larger increase was countered by the 150 reduction in the fuel levy, bringing some relief to customers. Food prices have also been on an upward trajectory, with global supply chain problems mainly to blame.
We'll continue to see pressures from food, grain prices especially, and of course elevated fuel prices with the more recent weakness in the rand does pose cumulative upside risk to the consumer price index over the coming months as well. All in, we anticipate further monetary policy tightening by the Reserve Bank as a consequence of this elevated inflation readings, which are very close to the ceiling of the Reserve Bank's 3 to 6% target band.
It's expected that inflation will moderate in the second half of the year going into 2023.
We're going to see CPI inflation rising over the short term. We actually think that we're going to peak out just above 6% in June of this year and probably start to come down a little bit after that. But for the year as a whole, we're expecting that CPI inflation in South Africa will average 5.9% this year before easing a little bit into 2023 to about 5.4%.
The Reserve Bank will likely continue to hike interest rates as a result of the high inflation and the upside pressures going forward.
South Africa sees a Monetary Policy Committee meet this week on Thursday, and it's expected they will hike interest rates by 50 basis points. This is certainly what's expected by the financial markets, and the SARB does tend to follow what the financial markets anticipate. Of course, if we actually have a look at South Africa as well, we have seen inflation has risen to the upper limit of the inflation target, and of course the United States is hiking its interest rate substantially, and indeed by 50 basis points at its last move. As a consequence of this, we do anticipate that South Africa will see a significant upward pressure on its interest rates, both at this meeting and in fact could also see a 25 basis point hike in July as well.
The central bank has said it expects inflation for this year to average 5.8%, primarily due to the higher food and fuel prices. Gloria Sefako Mosi, SABC News, Johannesburg.